you take great issue with that intro that I just read, I think, and you have never seen a trade war that's not disinflationary, and you're pounding the table on that.
You go back to Smoot-Hawley, go back to 100 years. It just doesn't happen. The reality is, mathematically, it may look like there's additive prices look higher, but the end result is there's less trade and less economic activity, and the price increases don't stick. And if you think about it, particularly basic consumer goods, right, the ones that we sell in big box retailers and discount retailers and so on, in this political environment, those prices aren't going to get passed on to the consumer.
Well, that doesn't make me think it's time to buy stocks then. That makes me think the Fed might cut, which then we got another Fed put coming then.
That is
the
our
reason
view.
To buy stocks.
Well, look, the first thing is you basically until 2 weeks ago went up in a straight line for 4 months, and as we saw in the fourth quarter, things don't move in a straight line in this kind of environment. So in a lot of ways, this pullback was overdue. In our view, clearly you have the catalyst. It's in front of you. Clearly the rhetoric is not going to get tamped down, virtue what you just read. But to us, it's the Fed is going to be there the way they changed tack in January.
I just saw an article that said that this is now we're in a this is a situation that's not going to be cured by the Fed. That was the bottom line of an article. I saw it. Every day, these news organizations like Market Watch or whatever it is, they need to put out that they need to just churn this stuff out. And half the time, it's just like, this is just someone got assigned an angle by some editor, and I don't believe it. But that was the thrust of this, that the Fed can't save us this time because it's a trade war.
Not in that specific area. There's no question about the fact that the political risks are basically larger than they've been in many, many years. But, in terms of valuation and rationale to own stocks and the potential for, financing costs to be muted, things like that, there's definitely an argument that the Fed can help confidence at a minimum.
Simeon, you're a little shaken, aren't you, by this trade war?
Well, look, I think what I would agree with there is that it's an impact to GDP. The inflation aspect has to be transitory because ultimately you can't really pass on that much of the cost. But a lot of this is somewhat reflected in equity prices. We had about a 4% pullback this month. And remember that lower interest rates support multiples. So the valuation case isn't a bad one. If you're looking for places where maybe some pain has already been felt, one of the interesting places is mid-caps. Margins already started to decline in Q4 in mid-caps, and after a 3-decade run of good outperformance, they've underperformed in 2017 and 2018 and already going into this year. So there are pockets of the market where there's opportunity. But broadly, low rates certainly do help keep those multiples up.
But are you less bullish than you were before the events of the past 2 weeks?
Look, a trade war has to take a little bit.
But you think some of it's priced there?
I think that's right. It's not such a big impact that you look at what's happened in May and say, listen, 4 or 5%, rates staying low, maybe a cut, seems to be not such a bad
You were a
scenario.
big 3,100, 3,200, 3,300 S&P guy. Did this change everything?
So our price target for year end is still 3,000. But what it does, we've said all along that if everything went right, China, Brexit, the Fed, if all the stars were in a line, you could overshoot to 3,400. That probability has been reduced fairly drastically.
What if everything goes wrong?
Basically, if everything...
No deal. The Fed is forced to cut because we got to, do something about economic growth. What happens?
If everything goes wrong, you could retrace the entire gains from December. That's 2350. Yep. Because the psychology changes to whereby the multiple assigned to stocks in a global economic Cold War that's long-lasting decreases.
So there is a limit to which the Fed cutting rates will help hold up stocks.
Oh, there's
correct?
definitely a limit to it, no question about it.